Good morning, doctor. My name is Tan Weijie and I am from 21C. My matrix number is 211222414. Today I'm going to introduce the introduction of the Genting Highlands. Genting Highlands was founded by the Chinese businessman Lim Go Tong. Genting Highlands was founded in 1965. Genting Group is a Malaysian conglomerate based at Wisma Genting, Kuala Lumpur. Genting Berhad is listed subsidiary Genting Malaysia Berhad, Genting Plantation Berhad, Genting Singapore Berhad, and its wholly owned subsidiary Genting Energy Limited are all parts of it. Vision and mission and ethics of the Genting Highlands. For the vision of Genting Highlands, we are leading multinational corporation committed to enhancing shareholders' value and maintaining long-term sustainable growth in our core business. For the mission of Genting Highlands, responsive to changing demands of our customers and excel in providing quality products and services. For the ethics, they are business integrity, disclosure of information and intellectual property. For the product and services, Genting Group and its brand affiliate market and supply a range of goods in core leisure and hospitality business under a number of top brands including Genting, Genting Brand, Genting Grand Rewards World, Crockfords, Genting Club, and Maxims. Genting Malaysia is a primarily a hospitality and leisure firm with a greater than 50 years of experience in Disney parks, glamping, establishment, beach resorts, hotels, and other fun activities. That's all. Thank you.
Good morning, madam. My name is Lim Ching Kai, metric number 211220555 from 21C. Today, I will present income statement part. The table above shows the vertical analysis of income statement for Genting Malaysia Berhad from 31 December 2018 to 2021. The base year were used in 2018 and we will analyze from 2019 to 2021. Next, we go to the highest and lowest amount part from the vertical analysis of income statement. We can summarize that the highest revenue is RM 7008.1 million in 2019, while the lowest revenue is RM 1542.8 million in 2021. Secondly, the highest cost of sales is RM 5113.5 million in 2019, while the lowest cost of sales is RM 1760.6 million in 2021. Thirdly, the highest gross loss of profit is RM 1894.6 million in 2019, while the lowest gross loss of profit is negative RM 217.8 million in 2021. The highest loss or profit from operations is RM 1429.7 million in 2019, while the lowest loss or profit from operations is negative RM 498 million in 2021. The highest loss or profit before taxation is RM 1281.5 million in 2019, while the lowest loss of profit before taxation is negative RM 711.8 million in 2021. Lastly, the highest loss or profit for the financial year is RM 1184.6 million in 2019, while the lowest loss or profit for the financial year is negative RM 523.8 million in 2021. Besides, the table above shows the horizontal analysis of income statement for Genting Malaysia Berhad from 31 December 2018 to 2021. Next, we go to the most value change or percent of change part from the horizontal analysis of income statement. We can summarize that the revenue was decreased by negative 54.99% or negative RM 3.3853.5 million from 2019 to 2020. The cost of sales was decreased by negative 46.41% or RM 2373.3 million from 2019 to 2020. Thirdly, the gross loss or profit was decreased by negative 152.56 or negative RM 632.2 million from 2020 to 2021. The loss or profit for operation was decreased by 443.67% or negative RM 406.4 million from 2020 to 2021. Next, the loss or profit before taxation was went down by 126.83% or negative RM 3398 million from 2020 to 2021. Lastly, the loss or profit for the financial year was reduced by negative 124.12 or negative RM 1470.3 million from 2019 to 2020. That's all for the income statement part. Thank you.
Hi doctor, my name is Angeline Ong Sing Ru and my metric number is 211222347. Now I'm going to present about the vertical and horizontal analysis of statement of financial position for Genting Malaysia Berhad. Next is vertical analysis of statement of financial position. In 2019, the non-current asset has covered 77.7% of total assets, which is higher than current assets with 22.3%. In 2020, the non-current assets accounted for 93.1% of total assets, which is higher than current assets with 6.9%. In 2021, the non-current assets showed 90.8% of total assets, which is higher than current assets with 9.2%. In conclusion, the company invested significantly more in non-current assets than in current assets. Furthermore, total equity accounted for 61.7% of total equity and liabilities in 2019, which is higher than total liabilities, which accounted for 38.3%. In 2020, total equity has risen to 64.8% of total equity and liabilities, a significant increase over the 35.2% of total liabilities. In 2021, total equity fell to 57.9% of total equity and liabilities, but it was still higher than total liability, which is 42.1%. This indicates that during these 3 years, the company was primarily financed by its owners and was heavily invested in reserve. The last one is horizontal analysis of statement of financial position. Within all asset accounts, we can see that cash and cash equivalents gain the highest rate of change, which is 104.7% between 2021 and 2020. Higher liquidity is achieved by increasing the cash and cash equivalent. In contrast, the amounts due to related companies, which is current liability, is one of the top accounts with highest rate, which is 234.1% of change across all equity and liabilities accounts. The liability will reduce the company's value and equity, causing the company's financial health to be at risk. Most of the equity and liability accounts has a negative percentage change from 2019 to 2020, indicating that the company's equity and liabilities had decreased. Expenses and losses has reduced the owner's equity. Since declines in total liabilities indicates that a company had paid back what it owes to suppliers, this was a good situation when the total liability decreased from year to year. That's all from me. Thank you.
Hi, madam. My name is Crystal Kai, and my matrix number is 211220511. Today, I'm going to start my presentation on liquidity ratio. What is liquidity ratio? Liquidity ratio is generally used to measure a firm's ability to service its short-term debt obligation. Liquidity ratio have two sub-ratio, which is current ratio and quick ratio. The table shows the current ratio and quick ratio in year 2019, year 2020, and in year 2021. In conclusion, the table has shown current ratio of Genting Malaysia Berhad in year 2019, in year 2020, and in year 2021, which is more than 1. Therefore, for the year 2019, 2020, and 2021, the current assets of Genting Malaysia Berhad fulfill the requirements to complete the claims against its current ability. After deducting inventories, it shows satisfactory levels to fulfill a firm's obligation in year 2019, where the higher the value of quick ratio, the higher the ability of the firm to convert its current assets into cash. Now I continue my presentation on efficiency ratio. This ratio measures the extent of the efficiency of firm in using its resources to generate sales. This ratio has 5 sub-ratio, which is inventory turnover ratio, average collection period ratio, total assets turnover ratio, fixed assets turnover ratio, and account receivable turnover ratio. In conclusion, the table has shown that the inventory turnover ratio for Genting Malaysia Berhad in year 2019 is 86.5 times, which is higher than in year 2020 and 2021. Therefore, for year 2021, the inventory turnover ratio is unsatisfactory compared to another 2 years. The Genting Malaysia Berhad is an average collector credit sales every 19 days in year 2019, 29 days in year 2020, and 73 days in year 2021. Therefore, for years 2021, it is unsatisfactory compared to another 2 years. Furthermore, the total assets turnover for Genting Malaysia Berhad is not satisfactory. This is because this ratio number indicates that the managers are not effectively utilizing resources to produce sales. The investment in fixed assets shows a lower efficiency from year 2019 to year 2021. This condition is unsatisfactory. Thus, the account receivable turnover ratio for Genting Malaysia Berhad is become lower from year 2019 to year 2021. It shows that Genting Malaysia Berhad is less effective in extending credit as well as collecting the debt in year 2021. Thank you. That's all from me.
Good morning, madam. My name is Lin Jiaqian. I will present about ratio analysis. For my part is leverage ratio. The leverage ratio is measuring the degree to which an investor or businesses utilities the borrowing money. There are 5 sub-ratios to be calculated in order to measure the utilization of borrowing of the firms. The first one is debt ratio. Based on the table, conclusion for the debt ratio value for Genting Malaysia Berhad shows that for every 1 ringgit of its assets, 38 cents is financed by loan debt in year 2019, 35 cents in 2020, and 42 cents in 2021. For the return on interest ratio value for Genting Malaysia Berhad in 2019 is higher than 2020 and 2021. For the conclusion of debt equity ratio of Genting Malaysia Berhad shows that for every 1 ringgit of equity, the debt amount is 62 cents in 2019, 54 cents in 2020, and 73 cents in year 2021. For the conclusion of equity multiplier ratio, a higher value of ratio means the more assets will fund by debt than equity. Number 5 is long-term debt to total capitalization ratio. For the conclusion, Genting Malaysia Berhad used about 29.66% of parliament financing from debt source in 2019, 31.06% in 2020, and 38.18% in year 2021. For the profitability ratio, indicated the effectiveness of activities and transactions in the firm's ability to generate profit. There are 5 sub-ratios to be calculated in order to measure the profitability of the firms. The first one is gross profit margin ratio. For the conclusion for Genting Malaysia Berhad is 3.05% in 2019, 15.12% in 2020, and 12.37% in year 2021. For the operating profit margin ratio, the Genting Malaysia Berhad's operating profit margin ratio for year 2021 is higher than 2020 and 2019. For the net profit shows that for every 1 ringgit invested in sales, Genting Malaysia Berhad can get a net profit of 23 cents in 2019, 10 cents in 2020, and 30 cents in 2021. For the return on total assets ratio, Genting Malaysia Berhad is 4.13% in 2019, 1.03% in 2020, and 2.01% in 2021 for every 1 ringgit of total assets, which is not satisfactory. The last one is return on owners equity ratio. The Genting Malaysia Berhad's return in 2020 is 1.59%, are low compared to year 2019 and 2021, which is not satisfactory. Thank you.
Good morning, Doctor. My name is Cocaine. My matrix number is 211220544. Today, I would like to present about the recommendation and the conclusion part. Our group have suggested monitor the financial position to improve the net profit and financial situation. On a monthly basis, the Malaysian company should manage the business process and analyze the target set in the business plan. For example, fund and cash flow statement can be used to monitor business finance. A company cash flow and fund flow statements are critical. It shows how much a company liquid cash is coming in. In conclusion, the end of our goal doing this research is to investigate the risk of Genting Malaysia Company from 2019 to 2021. Our group realized that Genting is suitable to be invested. Our group have evaluated the quick ratio. The quick ratio of Genting is 1.82 times in 2019 and 1.39 times in 2021. The quick ratio is less than 1.0, showing that Genting Malaysia Company will be able to fulfill its current liabilities without growing profit or making investment. It's because the reputation may help identify the short-term viability of Genting Malaysia Company. The higher the quick ratio is, the company will be able to cover its short-term liability. Thank you.